Joining us now, we've got Chris Versace, Chief Investment Officer, Tematica Research, to get a closer look at earnings season. All right, so we have a slew of names reporting this week, about a quarter of the S&P 500 reporting this week. What's your expectation in terms of themes? And when I say that, I mean, in particular, guidance. At first, I thought guidance was going to be like Delta at the beginning of the season, where they just like, okay, we're not giving you anything.
Right.
But then you had the United doing the two scenarios.
Right.
I call
right.
it, the best of times and the worst of times.
Split decision.
Yes. Then you also have some who are sticking by their guidance. So what's your expectation?
I think we're going to see all of that and more, because you have to remember, too, there are some companies that pulled their 2025 guidance as well. So I think we're going to have to go through case by case. And this time around, more so than usual, I think comments that we collect on the earnings conference calls are going to be even more important, because the management teams will get peppered, right? What's going on with your margins? What's the impact of tariffs? Yeah. And that's not necessarily stuff that they're going to contain in the earnings press release, right? So you have to sift through and understand how that's getting baked into their expectations, or if it's not.
Are you expecting more conservative guidance overall?
100%.
Okay.
It's, when we look at the impact of tariffs, the uncertainty, business uncertainty at, near record levels, according to the NFIB, consumers slowing their spending or at least being more selective, how could they not?
And then how could they not? That's a great perspective. And to be fair, maybe the market is expecting that overall right now. But if that is, from your view, is that fully baked in, the expectation for more conservative guidance? If not, could we see further repricing of risk?
I think that we will. So if you take a look at just the back half of the year, the numbers are still up compared to the first half, almost double digits. Right? Still uncertainty out there. Right. I think that's where we're going to see the numbers come in, as well as for the June quarter. And as that happens, people have to say, well, all right, what's the real rate of earnings growth? What's the right multiple to put on that? And that's why I think you've already started to see some strategists come down with their S&P 500 targets, 6,800 down to 5,300, 5,500, 5,700. We'll know a lot more this week, as you said, 24% of the S&P 500. But next week, we've got 4 or 5 companies,
including Mag 7, yeah.
Right, that when you add them up, just next week alone, it's almost 20% of the S&P 500 index by market cap.
So then, okay, so we've got some members of the Mag 7 reporting next week. We've got one today, Tesla. We've covered that ad nauseum, but I want to talk about the expectations for those members of the Mag 7 who are reporting next week. What's your base case for those members, especially because overall, I've seen the expectations we will still see double-digit growth, not what we saw last year, obviously, but what is your, what are you preparing for?
So I think we're going to continue to see good earnings growth. The question that I think the market is kind of struggling with is, boy, all this big capital spending that we've heard about earlier in the year, what's it really going to be going forward? We have seen Microsoft start to say, oh, we're, being a little more prudent with our spending. I think Wells Fargo was out with a report that Amazon might be doing something similar, but that conflicts with what Andy Jassy had to say. So, when we get Google's results later this week, capital spending is going to be key, and I think that's going to set the tone for what we see.
Okay, so that's going to set the tone. Right now, yes, you do have some reaction to earnings, but it still feels like a headline-driven market, especially as it relates to tariff and trade policy. Is that your view that will still be kind of the overarching theme to pay attention to in the weeks ahead, honestly?
So I think it's going to be that, but also we're going to start getting April economic data. Really tomorrow with the flash PMI. And that's going to tell us, okay, first hard look at April, generally speaking, but also first hard look at the impact of tariffs. And that, based on that data, I think you'll see folks rejigger expectations for the ISM's PMI, which goes into GDP calculations. People will rejigger inflation expectations as well as employment expectations for April. So tomorrow, to me, is a big deal in terms of that flash PMI, but then we also get the latest Fed beige book. Thanks. And put those together, and people are going to be recalibrating expectations for the economy.
Okay, that makes sense, because the most recent economic data points don't really point to the weakening consumer sentiment. They don't really point to just the weakening confidence that we've seen across the board, whether we're talking about consumers or the C-suite. But I do wonder if when we get more of that April data, if we'll still continue to see some strength because of that pull forward demand that at least anecdotally, we're hearing about.
Yeah, I mean, that's the same argument we saw about retail sales, right? And then you had American Express come on and say, hey, April so far has been good.
Yeah.
So that kind of supports it. But unfortunately, we won't know that until we get like the May data.
Right.
So.
Okay, all right, something to look forward to. Okay, so what are you paying attention? We've got a lot of Fed speakers today.
So let me cut you off.
Yes, it's fine.
I could care less what they say today.
Okay.
Because it
Why?
doesn't matter. Because
Okay.
remember, tomorrow is when we get that flash PMI report and the beige book. So there'll be fresh data. So to me, the speakers tomorrow night and Thursday, Friday, far more insightful.
And then, so far more insightful, does that then, to you, I know you talked about resetting in various areas, does that then potentially reset expectations for when the Fed could cut rates? Because we know the pressure is on from the White House.
Yeah.
To the Federal Reserve Chair, Jerome Powell. And obviously, it's not just his decision.
No.
There's an entire committee
Correct.
that has to make that decision. So far, right now, when you look at the CME Fed Watch tool for this next meeting, there's not an expectation. But could PMIs change that?
I mean, any fresh data could change what we have to expect. So yeah, I think we have to be very careful in kind of digging into that data and understanding really what it says and then the implications of that, whether it's for GDP expectations, monetary policy, what have you. Again, that's why I think tomorrow's data is going to be very important.
And then what sectors of the market do you like now in the context of this uncertainty?
So I'm trying to zero in on areas where we know either consumers or businesses are still spending. So we continue to like the AI stocks, right? Whether it's ServiceNow, Elastic, what have you, because driving productivity. We continue to like companies like Axon, benefiting from public safety, but also the adoption of productivity and AI. So those are some areas, but even this morning, Herc Holdings came out with some relatively good numbers, kind of backing the mega construction projects, whether it's data center or infrastructure spending. So in the portfolio that I run at the street, we have United Rentals, Vulcan Materials. We continue to like those areas.
Okay, all right. There's still some winners to find here, even in a difficult market. All right, Chris. That's Chris Versace, Chief Investment Officer, Tematica Research.